So how many beginner traders do I have out there right now that are currently watching this video? All right. If you haven't subscribed to the channel already, you may want to go ahead and do so now because I provide lots of valuable information. And the reason why I provide or share my experience and knowledge and when it comes to trading futures, because I want to see people become passionate about what it is that they are chasing after. I know we are future traders and we want to really master the concepts, especially market structure, so that we can understand which ways we need to trade, right? So what I want to share with you today, if you are a rookie, someone with no experience at all, right now in 2025, watch this video and go ahead and click the subscribe button now, because I assure you that this information is going to be very valuable in which I'm going to share with you today, because I want to bring together both, supply and demand zones, but also bring in the fold about liquidity, because it is what fuels the markets every single day. A lot of people have a hard time being able to read the flow of the market, meaning structure, right? And I talk about looking for, the trend direction. Are we making higher highs and higher lows, or lower lows and lower highs? Are we breaking structure to the upside to look for beautiful pullbacks to key areas of demand, aggressive buying? Or are we making lower lows and lower highs and where we can pull back to key areas of supply, aggressive selling to the downside? So if you're someone that's a beginner trader and you are basically doing your research of trying to find educational material and trying to find a way in which you can possibly make money trading the future markets like the NASDAQ, you may want to stay tuned and continue watching to the very end. Now, I'm going to go ahead and jump into today's video, but before I do, if you want to join the Discord, the link is down in the description portion of the video, the first link. The second link there you'll see, it says become an elite channel supporter. What you receive there are my trade breakdowns, like the video, not the video, but the trade that I took today, I posted over on our Discord. I post my trade entries, then I'll go back and I will break them down in detail, because it helps. Trust me when I say this. Lots of people have found much success in watching the trade breakdown videos, okay? Because that's where I go in deep and talk about not only the strategy, but also I'll break down the trades in reference to where to take profit at, where to place your stop loss at, also in reference to structure, so that you understand. So you're basically getting a full-on mindset from upstairs in my head, what I was thinking on each trade that I took. There are tons of those videos already there on that private community channel. Or the membership tier, if you choose to, one or the other, say. And if you're interested in becoming an elite member, again, the link is down in the description portion of the video. You get the trade breakdowns, you get the video playlist, you get the market structure video that I covered in detail surrounding market structure, okay? All for a very, very small price of only $6.99 a month. Think about it. Just a month is all you are paying, and that's pennies on the dollar on a day. Now, what you're doing in support of my efforts as not only a trader, but as a content creator as well, because I want to share from my own point of view with traders. I'm not here to rob anybody's pockets. It's just a way to be able to keep me fueled and going, in a sense of providing the content and a kickback saying, Mike, thank you for making and creating such valuable content, because I want to see people become very inspired in what they love or want to do, trading, right? So without further ado, let's talk about zones. Let's talk about liquidity. Let's talk about looking at structure as a whole and understanding which way we should trade, because we all know the market can shift up, right? So if we are making, let's say for right now, kind of go back, making a bearish movement to the downside, all right, we should only be looking for what? Pullbacks to go long, okay? And the reason why I'm saying this is because I want people to understand that the market can change at any given point, but you have to be able to make very sound decisions on which way to actually trade, especially if you're someone that is a beginner, no experience, all right? So the market is making lower lows and lower highs, right? We made this low here yesterday, the 25th. Then it starts to make structural breaks to the upside, making higher highs and higher lows, right? Taking out structure here, taking it out here, and moving higher, pullback. Broke structure, broke a high, pushed up, pull back, broke structure, broke a high. So as long as we're making structural breaks to the upside, then we should be looking for pullbacks to key areas of demand. A lot of people get confused when it starts making, a low here, and then we've got where it's making higher highs and higher lows. After taking out structure over here, I talk about the infamous what am I trying to say? The trend reversal in the market. So I'm just going to show you right quick for guys. I guess like I said for the last time, it probably won't be because I said I've done this a million times. Lower lows, lower highs, lower lows, down to the downside, right? The market shifts. What is the first telltale sign of the market shifting? Where it makes a high, okay? There's a low, there's a high. I don't know how to break this down any more than I've already done a million times, but I'm going to continue doing this because I know people, we all learn at different paces and you know, different curves. So we make a high here. We haven't broken structure here yet, right? This is the key right here when it takes out structure going back to the upside. Look to the left-hand side of your chart to see if it's going to push up and start taking structure out, okay? Makes a high. Higher low. We haven't broken this low yet. Breaks higher, takes out structure. Excuse me, guys. Takes out structure above this area and this area. That's your reversal. The moment it starts taking out definitely structure over here to the left-hand side of the chart, like these areas when the market was selling off, okay, stopping these sellers out, okay, up as it moves to the upside, then you know the market must be getting ready to move in the opposite direction. This is your reversal pattern when the market shifts from down to up. And then in reverse up, if you flip it, going from up to down, okay? High, not breaking the low. Higher low, breaking structure here and here. Then it could be a pullback to this area of demand down here. That's what we have right here. Push up, broke structure here, pull back, broke higher, broke more structure, and it broke structure above here, pull back, demand. That's why the market rejected off of this high probability zone right here. It's an area of demand, okay? Then it pushed up a little bit, came a little further down, wick below this area here. But still, this is your low off of this, coming from this high right here down to this low. And then it breaks structure to the upside. Breaking structure here. So then we'll look for what? A pullback to a key area in which you could actually go long from. All right. So this would have been maybe a little demand area right here. To where it rejected at, whatever the case is. But it came down to this area here and rejected and pushed higher, broke structure here. As it broke above this area here, came back right here, demand area right here, broke higher. Okay, higher highs, higher lows. Coming from a downtrend, breaking structure higher, shifting the trend back to the upside. Now pay close attention to this right here because this can make a lot of change and make a huge difference in a lot of people's trading. Liquidity. That's what the market in most time is always, well, not saying that's what it is always going after areas of liquidity. It's creating liquidity pools and going to take them out. All right. And liquidity pools is nothing more but the market maker setting up traps, and you can become part of that liquidity pool to where they're going to run stops at, either buy stops or sell stops. Right. So if you notice when the market started making higher highs, well, let's say this for example right here. Okay. Right here, this is a supply zone, okay? Because if you move to the left-hand side of your chart somewhere, I don't know, maybe around the February 3rd or somewhere, it broke structure to the downside. We got this aggressive selling right here. It pulls back to it. So think in terms like this. If the market takes out an area, a level or area of structure, in this case here to the downside, and then it comes back to this area, we can go ahead and mark it up, right? First of all, it hasn't broken any structure, meaning taking out anything to the left-hand side, meaning sellers coming to the downside. So we haven't really gotten a reversal. Yeah, we made a high here, higher low, higher high, higher low, but we haven't taken out any structure here. When it comes back and tests this supply zone, this is a valid supply zone right here, that the market can react to. Because it's broke structure somewhere to the left-hand side of the chart. I've already looked at it. I'm not going way back to show, but if you look further back, you'll see with this little zipper or this little swing here on the higher base chart, broke structure to the downside, this aggressive selling. Comes back, test the area here. If it breaks structure, I'm talking about confluence of structure being broken and liquidity. Think of it in that terms like that. The market breaks structure as it comes down, it pulls back here. Is there liquidity resting below areas? Yes, we have these lows here and lows here. So this is the reason why the market, rejects these areas and comes down and takes out these lows here, because we have pretty much equal lows coming back to the downside. So it runs this area and breaks structure lower. So we got to break a structure after a pullback to a key area supply, breaking structure lower to the downside, taking this area out. Now, as it gradually moves back up, yes, this is small area of supply right here, and it does reject it, and it can take it for a quick scalp on the lower base chart that I talk about. Mark up the higher base zone first, okay? On the 120, where there's supply or demand, in this case here, supply, Then shift over and move down to your lower base chart to see if you can find a lower base, whatever your entry chart is, a lower base supply zone on the inside of the larger supply zone to look to take a trade. Now, in this case here, I'm only going to be able to take it down to about 21,045. So maybe I got somewhere in 62, maybe 61. Scalp it for maybe 10, 15 points and be done. Okay, because I know it can, what it's doing right now after rejecting the supply here, that it could come to this area and then continue pushing higher. Now, because one thing for sure is that there is liquidity resting right here above areas of 21,094. So, but once it breaks and takes out this area right here above these similar highs or equal highs right here, that's where your mind should start to think, okay, now we are starting to push higher. We're taking out a minor area structure off of this swing right here, this larger swing. This could be a reversal back to the upside, right? And especially if it takes out the high of that swing. Okay, the high of that swing, then you know that the market is, okay, it's going back up. It's taking out sellers that were selling as it goes back to the upside. My mindset is going to start to shift back to the upside. Okay, so what do they do then? They make a higher low. They take out more structure right here to the upside, over here and over here. Now, if I was a buyer or I was a trader looking to, go long off of the NASDAQ 100 futures, okay? All right, this is what I would be looking for, a pullback to this beautiful area of demand right here. Why? Because there's an imbalance. And you guys that may not have much experience or know about the terminology imbalance, or when I say gap, they're the same thing. Please spend some time watching the video content and you will, pretty much grasp it. This candle here has a gap on it coming back down to this, the area of demand. Pulls back to this area of demand. Now, I'm going to get into a trade once I get the rejection. But what I'm going to do is mark up my higher base zone and then move down to my lower base zone that I talk about in the strategy all the time to find an entry point in here to get me more into a precise entry, right? Now, my first takeout area is going to be somewhere up in here, maybe around 21,000, say 200. That's a round number, so you can expect the market is going to have some reaction there. But if I look further above, what do I see? This was yesterday about 215, 220. I see liquidity. And I also see liquidity here. What is liquidity? Equal highs. When you start to see equal highs or equal lows being stacked up, at some point the market is going to take a heavy interest and want to run those areas. Okay? So the market comes back to this area. All right? I can take it here. Maybe close most of your positions off and then leave a runner to maybe capitalize on the market taking out liquidity above this high here at 54 and above these highs right here. This one and this one right here above this area at 288. If you took this trade yesterday, you came out very well. Now, you say, well, the market pulled back. Yes. Okay. Your entry point was going to be somewhere in this area right here, right? How much did it come down right here when they pulled back? Now, let's see, right below 21,000. Let's see, mark it up to the T. 21,099. They came down to 21,000. Oh, I'm sorry. 21,000. This thing is okay. 21,000. Is that right? Give me 1 second, guys. I'm sorry. Blow this up. My eyes are I can't even lay my eyes on what's going on here. 21,122. They come down to 21,121. 1 point. I talk about in many videos that they love to tick out areas or take them out just by a few ticks and then keep going to the upside. Okay? Think about it. Why are they doing that right here? Because there's liquidity resting right here, equal lows. So if you got into this trade off this demand zone and it goes up to the upside, you can expect that something's going to happen in this area here. They may fold back, come back down, take out liquidity right here, just wicked, but they're going to aim for areas of liquidity resting above. So if they take out an area of liquidity, say at the bottom portion of an area, say a low, all right, maybe this is the entry point here. Then they're going to search for a liquidity. They're going to turn back around, search for liquidity, going back to the upside, and it's going to be up in this area here. So basically what I'm saying is that if the market starts to break structure and the trend has changed to the upside and we're bullish, high, higher, low, higher highs, come back, demand resting right here, look above you to see where they could take out liquidity resting above off of a structure break to the upside, meaning off of a key area of demand that it pulls back to. Look where the market can run liquidity at, okay, back to the upside. As you can see here, the first area of liquidity that they actually took out before they came back down right here was this area above this area here at 54. I mean, excuse me, 21,254. Yeah, right here, okay? They came down, took out liquidity here, and came back up. So they took it out here, came back down, took it out here, and then went up and took liquidity out right here. So what I'm trying to say is plays off of nice areas where the market has broken structure and you've got a clean demand zone or supply zone, and it comes back to that zone, look above you to see where the market could first stop at, but also look to see where there's liquidity resting above, because those could be key areas that they are targeting, okay? I'm going to show you one other thing right quick. All right, so here's an example I want to show you on gold, all right? Just for example, all right? The market right here, it makes a high. Well, let's take a look at the structure first of all, okay? We can see, it's going sideways right here, but you have a prior high right here. Please excuse the boxes, okay, that I have marked up here. You guys should already know if you've been following the channel. If not, these are supply and demand zones. But high, it makes a low here. It comes back up, and it just basically doesn't break and close above it. Just wicks above that high there. So basically, this would be high, higher, low, and it's the high over here, and then it starts breaking structure to the downside. So we're making these lows, lower highs, lower lows, lower highs, lower lows, breaking structure below these points as it moves lower, but also taking out structure here and structure here. So overall, the market is bearish once it starts breaking structure to the downside, up until where we start to re-break structure back to the upside. So we have that's the a major high resting over here. Now we have this low resting right here, high, higher, low, break structure above here. Okay, remember what I said, and where it's coming from, a lower area where it's making lower lows and lower highs, high, higher low, higher high. I'm not really interested in going long at this point until it really starts taking some structure out to the left hand side, like above this area here. When it does that, high, higher low, higher high, taking structure here, taking out structure right here, then I'm interested in looking for maybe an opportunity to go long, because now we got this low here, and as it's making these higher highs and higher lows, it's making a high right here. So this is basically a major high right here, okay, off of this leg right here, major low, major high. And when it comes back, okay, if it starts folding back down to the downside, right, yeah, you could look for an opportunity to go long here, but you gotta be mindful of what's right above you as well. I always talk about that, because there's some stopping points in which the market can reject that, right? So when it comes here, it taps or hits against an area of resistance, but then it pushes lower, okay? So it's making a low, lower high, and breaking structure below this area here at 29,018, okay? So it's breaking below this area and this area, but we are still, overall, you can look for, even though we start to make lower lows, lower highs, you probably can look for a pullback to go short, right? Once it starts to break structure, if it starts to break structure, come back down. But this is your major low right here. And until we break this point, I'm going to be interested in looking for, possible pullbacks to go long, because we haven't taken out this low yet, okay? Because we're breaking structure higher now, here and taking out here. So there's the reversal pattern going to the upside. Haven't broken this low yet, so this could be treated as a lower, as a higher low, to where now it wants to start break structure back to the upside. It could, right? Meaning breaking above this high right here. But pay close attention to what it did when it did pull back to this key area of demand. What did it do? Pushed up, pulled back, broke structure above here, okay, and it broke out and took out this high right here, all right? So we got to break a structure to the upside. Pulls back. So when it pulls back to this key, anytime we have a nice structural break, okay, to the upside, this is going to be, and when you have an area of imbalance or gap resting back at the zone, that's one of the major ingredients for the great recipe to go long, okay? You've got a high probability zone with the imbalance or gap resting at it. It's broke structure to the upside. What more could you ask for? It comes back to the zone, right? And as it's retracing back to the zone, what does it do? Low, lower, high, comes lower, aggressive selling. All of these gaps, we can take it back up comfortably, probably to at least this area right here, right? But like I said, if we get a structural break with the imbalance or gap at the breaking structure, and then you get into a trade, look above you to see, okay, where else could it go to? There are equal highs resting right here, okay? Right here, as well as above this area here. So it could come back up here and break right above this area here. I mean, right above, right above this area here at 2,933.66, okay? But it can pull back first before pushing higher, all right? Good, okay? But that is another potential area where you can look to take the trade at. As you can see, they come up here, rejected off this area here, pretty much where I was looking to kind of get out my trade at, the one that I posted over in the Discord, and they came up here so far and haven't quite taken out this first area of liquidity here. But what I'm trying to say is that if you see where they're breaking structure and you have a nice break a structure to the upside, in this case here, then look for a key pullback or pullback to that zone there, and then look to see if the market can run up. And as you see, once it rejects, see if you can go up there and take out any means of liquidity above. They're always trying to do what? Chase or take out areas of liquidity. Who knows? They may come all the way back down here, grab these lows right here, and then go back up. Okay, remember what I said? They like to run liquidity on one side, then come back, maybe grab something else, and then go back up, you know? So right now, we haven't broken this major low here. So we're in between this low and this high right here. And when they came down here, this was a nice entry point to go long off of. So I just want to share that with you guys, all right? Anyone out there that's a new trader, look for things like that, because liquidity is the number one focus in the market and what it's trying to do. You know, it's like playing a game of chess in a sense. You know, you have to know your opponent's move, you have to be able to strategically know what they're doing. All right. After they make a move, you got to come up with the next move and be very, logical about your next move. Okay. Because that could really set things off. All right. Be a chain reaction. Correct. So understand when you see moves like this happen to the upside and they're coming back down. And look, when they came down here, they made this low. Okay, pushed up, pull back, pushed up. They were making these equal highs resting in this area here. They come down here, they came back to the demand zone, came back up here, and they may more than likely probably going to take out these highs resting right here. But they may pull back first before they make that move. Okay, so I just want to share that with you guys. This could be, something that really helps you out in your own trading, and just kind of encompassing zones, liquidity, understanding, looking for the breaks of structure. All this comes together into the fold can make a very nice recipe for a very successful career in trading. All right. Outside of that, that's all I have. Again, I'll be breaking the trade that I took today down here on Go and posting that over for all you guys that are the Elite Channel supporters, for you ones that are the members there. Breaking the trade down, giving the insight of what I was looking at, even moving down to the lower base chart. So hopefully this helps you guys out. So look forward to that video drop today. If you want to become an Elite Channel supporter, the link is down in the description portion of the video. Again, it's only $6.99. Once you click the link, make sure to choose the second tier. 2 tiers will pop up. Choose the one for $6.99. Okay, I know everyone probably spends that on a price of cup of coffee a day. So we're talking about something monthly for $6.99. That's pennies on the dollar on the day that could possibly change your life. Can't make any guarantees because everybody reads the markets different, and it took me to some point to where I'm at today to be able to become, consistently profitable. And I'm thankful that I am, because now I'm able to share and give back and share information, pass it along. So, and it's the same thing. I want you guys to do the same. Do just as well. Once you master something, if you become great at this, then pass things forward for the next person. Help someone out. Whether it's your kids or family member or a friend or colleague or someone that may take interest in what you have to share with them. It could be life-changing for others. Okay, open that door up. All right, that's all I have. Appreciate it, guys. If you haven't subscribed, please take the time to go ahead and sub by clicking the subscribe button. Make sure to turn your post notifications on so you do not miss any of the uploaded content here. Last but not least, if you could do me the biggest favor, just as I have given you lots of valuable information and continue dropping that every single day almost, click that like button right now. All right, I see you guys. I see hundreds and people watching the videos every single day, and I want to continue growing the channel. So all you got to do is just simply click the like button. Show me that you are interested, that you are thankful for what I've been sharing with you. Okay, appreciate it. Take care.